Hesh Sagafi, Liberty Home Mortgage. And what am I telling you about today? How important is credit? Okay? Credit's important. Is it the only thing for a loan? No. Is it an important piece to getting a loan? Yes. Now here's something for you. I should probably reverse it, okay? You don't need perfect credit. You can have a credit score in the 500s. Now in the 400s, it's a different story. But if you're in the 5s, it's doable, okay? Watch this one. As your credit score goes down, the amount of money you need realistically goes up like this. They work in opposite directions. If you have perfect credit, you can typically get into a mortgage loan with the least amount out of your pocket. If your credit is, well, as the credit goes down, the money goes up, okay? So realistically, credit scores go anywhere from 300 to 850. The higher, the better, naturally. If you're sitting in the 800s, God bless you, I bow down to you, it's perfect credit, wonderful. God knows you're gonna tell me that you have perfect credit but no job or something like that. So just because you have perfect credit doesn't mean you get a loan. Just because you have less than perfect credit doesn't mean you do not get a loan. However, as the score goes down, everything's relative. I mean, I've talked to people who are in the 500s who have a 50% down payment. And I've had a lot of people say to me, Hesh, if I had all this money, if I had that much money, I wouldn't have bad credit. Not true, okay? I've seen a lot of good people, for example, with medical collections, where they pay their bills on time all the time, suddenly an unexpected health incident or something comes up, and the next thing you know, they get rushed into the hospital, go to the emergency room, here comes $30,000 of medical bills, and the next thing you know, they're sitting at a 550 credit score because they've got 30 grand in medical bills dropped against their credit, which took them down from God knows a 750 all the way down to a 550. And yes, I can give you 1,000 stories of that stuff there. 1 or 2 late payments or 1 or 2 collections can drop your score a lot. I remember the one customer, as a matter of fact, it's story time. I remember the one customer had a 753 credit score when I started the loan process. They stopped making their mortgage payment. They missed 1 payment because their buddy, who I at that time called Einstein, okay, their buddy told them, you sold your house, don't worry about it, you don't have to make the payment. Never mind the fact that some guy named Hesh, that's me, Hesh said to them, keep making all of your payments as if nothing happened. Even though you sold your house, keep making all of your payments. You never know what happens. Maybe the buyer to your home gets declined on the day of closing. And if that day of closing is December 31st and you didn't make your December 1st payment and they get declined on December 31st, that thing rolls into January, you are 30 days late on your mortgage. That person went from a 753 to a 650, 651. It dropped them just over 100 points. 1 late payment on a mortgage kicked them 100 points down. That's how big of a deal late payments are. So don't think just because you have bad credit, it doesn't mean you have no money, okay? Or just because you have a lot of money doesn't mean you won't have bad credit. So you want to pay attention to this stuff. If you're in the 500s on the credit score, the score is not the only piece to getting the loan, but I will tell you it's a very important piece. I talk about this in all of my videos. It takes 3 things to get a mortgage loan: credit, income, and money. Credit determines if you can even get a loan. Income determines how big of a loan you can get. It takes a little bit of money for a down payment, things like that. As you have a bigger down payment, that's going to help you on the credit side. You don't need to have perfect credit. But if you're watching me saying, Hesh, I've got absolutely, positively no money to work with, I've got nothing, well, I've got news for you then. You better have some pretty solid credit. That doesn't mean an 800 score. That doesn't even mean a 700 score. But if you have 0 money to work with, and we start talking about down payment assistance programs and things like that, you really, really need to be in the mid to high 600s. Is it remotely possible to be in the low 6s and get some sort of assistance? I suppose it's possible, but realistically, and you'll hear me use those words all the time, there's the guideline and there's being realistic, okay? Just because you have a 550 credit score doesn't mean you don't get a loan, just as much as just because you have an 800 score doesn't mean you get a loan. So the credit score and the credit history are huge pieces to the equation. It's not an exact formula. Just because you're sitting on a 602 does not mean you do not get a loan. Just because you're sitting on a 750 doesn't mean you get a loan. I can't stress that enough. However, the higher the score, the more likely it is that you can get into something. The lower the credit score, the harder it's going to be. You want to keep following all of my videos. I actually have a video on how to raise your credit score. So I actually do another video that's 5 to 10 minutes long or so. They're not too long, on what steps you need to take to raise your score. Make sure you are liking these videos, hopefully. Even if you hate it, hit it with a thumbs down, I guess. Share it on your page because I guarantee other people need it. Subscribe. That way when my other videos come up, you'll be notified of some of those and it won't drive you too crazy because I only post a few videos a week, not too many. And of course, keep following along for the upcoming videos, my past videos, and I'll keep seeing you on the next video that I do. Thanks so much.